Okay, so on this chart, what I have is the relative volume split progression, which is this indicator on the bottom, which would be the third subgraph, and then I have the supply demand ratio, the SDR indicator, which is on the second subgraph, plotted in yellow with a horizontal line at 1, and candle charts on top. This we're looking at the S&P 500, and I have price profile on this chart, but normally I don't like to. I have it on here for the purpose of this video. I don't like to have it on in this manner because it becomes hard to see the profile. This is the way I normally have these three indicators, which is you can see the profile a lot more clearly, and you can obviously go through past days. It's still on the chart. I've just hidden the price data, and that's for me much easier because I can see clearly uh, the lettering, the TPO, the profile shape, much easier. In any case, for the purpose of this video, let's take a look at it displayed in this manner. Um, and you can just squeeze this SDR down so we have more room, but essentially what we have at the bottom, which is the relative volume split ratio progression, which we're taking a look at volume in blocks, basically in blocks of half session and a half session. Generally what you're going to see is you can see the histogram plots them with different styles. So you can, this is where we have a dashed line here, and then we have a solid line here. And so what we can see is that general pattern is that the morning session, the morning volume, let's call it, is always going to be heavier than the afternoon volume. And that's a pattern that you'll see in pretty much every market. And so this is basically a normal volume pattern. When you're seeing this, the markets are in a, a nice steady, they have direction, they're just steadily moving. There's nothing significant there. In terms of the SDR, what we have is essentially this is basically a supply demand ratio telling us you can use it intraday or you can use it as an end of day indicator. Both of these, I use both of these as an end of day indicator, but you can use the SDR and this as well for trading with using a price profile, because you can see if the morning vol is taking, at what time it's taking over the afternoon volume of the prior day. For example, at this time it started taking over the afternoon volume, and you can see what price, what the result of that is. So you can certainly use these, and I do, but it's not something I'm staring at because it's not a indicator that you need to stare at. I usually, you can put it on a corner part of your desktop on one of your monitors. Similarly with the SDR. Now the SDR, the way it works, if it's a ratio, so one would be neutral, values greater than 1 would be bullish, values greater than 1 would be bearish. So if we close the day with a positive value, then that is telling us the supply demand ratio is skewed positively. And similarly, if we or conversely, if we close below less than 1, uh, then we are skewed negatively. And what obviously on a day like this where we close at 1.02, we're skewed positively, but what ends up happening is, let's find a day, for example this particular day here, we were skewed positively by a, a large margin. In other words, we ended up around 1.6, 1.06. So uh, that you need to keep in mind as well. But these three indicators combined can give you, if you a profile user, if you use a price profile, these three indicators combined can give you more information than just watching the profile. So let's go ahead. So we're seeing here that volume is fairly normal, and as we look at the SDR, we're seeing that it's continuously climbing from this day forth. It's been climbing, essentially just rising higher from one day to the next. In the morning it rose and then it came back down again, and you can see that trend has been in place for several days now. And now notice how here the morning histogram is being painted red, a dark red color. This is a dark red color. This is the morning block volume, and that's being painted red. And the reason for that is obviously in the morning, the normal pattern is the morning volume is going to be greater than the afternoon volume. But when it's painted dark red like this, it also means that the morning volume was greater than medium volume. In other words, more than normal. So this is the medium volume color that it gets painted. So we see that, and on this day we see that. So prior day no volume. Let's take a look at the prior day. Before that, the morning there was volume. The next day no volume, just normal trading. And the next morning volume picked up and became heavy. And notice it became heavy at this point here, okay, during this period here where price was accepted, and then for the next 2 days we've been rallying. Okay, so it's these little subtle nuances that you're going to build with your price profile observations, with your SDR observations, that could help you uh, find locations on your chart where you can look for trades. So on a day like this, you're really not looking for a trade, or this day, because the volume pattern is pretty normal. This is an imbalance. Now the imbalance can be even more significant than that. So as we pull forward, for example, in this particular day, on this day we're seeing normal pattern where volume in the morning is higher than the volume in the afternoon, but we're seeing both afternoon volume and morning volume showing us being painted red. So this is a volume imbalance. And if we take a look, we see that the next morning we gapped up, consolidated, and then broke out again. So from this period forth. Okay. Something else you want to note also is that this particular day, the SDR closed at, let's see what it closed at. Closed at 1.06 level, which is fairly high. So it's definitely skewed, and you have this volume imbalance showing up. So the rest is a matter of just doing your other type of whatever strategies. I'm using price profile on here because that's something I understand, but you may be using different types of indicators to find your strategy. So what you could do is combine this information, and when you see this type of imbalance, that's when you would want to look for trades. Now, if we look the day prior to that, we see a serious imbalance, because we're seeing a red plot. A red would be extremely high volume. So we're seeing that, and you can see that the high volume was from this point forth. It wasn't during this major decline. So that's when you see that type of imbalance, you definitely have to pay attention, because that means a major shift in the market is going to take, and you want to be a part of that. And so the next day, the market recovers from this rally and then changes direction and takes off for 1, 2, 3, 4, 5, 6 days. Okay, so not only for intraday traders, but as well as those who intraday trade and swing trade, this is a very important part of the type of analysis to do, especially because it puts you on the place where you should, when you should be looking for major shifts to take place. And from that point, it becomes just a matter of entry strategy, so to speak. So for anybody who uses price profile type of analysis, we can see that this day we have this bulge here at the bottom. This is where price traded most. The next day we open up right around point of control, and we're able to move above the point of control. More importantly, this is the high of, this is where the bulge sort of began. And if you extend that right, you can see that in the morning we opened in there, moved above that, came back on that level, which is a great area to look for an entry price. Stop would be right below that level. So in other words, in the morning we opened up, then we moved value up to here intraday, developing value. Once we moved the developing value in there, it's reasonable to think that a pullback to this bulge should bounce off of it. So looking for an entry point here, and holding part of that position as a swing trade would have been a very nice trade. And so you don't just take a look at this shape of the profile and say, okay, I'm going to look for a swing point. You want to see first the imbalance. Then you want to take a look at the SDR, okay? And you want to see what the SDR is doing now. The SDR leveled off here, okay, and never declined again and closed much higher. The next day, the SDR pushes above 1, okay, and moves above. So the supply demand ratio in this indicator is based on buying and selling, so it's not some averaging. There's absolutely no averaging in this indicator at all. It's just a matter of taking a look at the buying and selling volume. So we can see that the SDR is above 1. So when you put everything together, you can see how this was a very reasonable. You're putting together, for example, market profile analysis or price profile analysis, and putting together volume analysis to find imbalance in the volume, because when there is imbalance in that volume, that's when moves that has to work itself out one way or another. Um, one of the other one of the other tendencies of this indicator is that if the SDR is closing skewed positively, then the chances for the next day to for the market to rally or make a positive directional move, a bullish directional move, very high. But again, it would depend on doing some research and seeing what level. For example, a 1.06, that's a significant level. So the next day, it's not very surprising that we see in the morning. Um, First of all, we had a gap above the prior day's range, and uh, we saw buying right from the beginning. And if you, with some of our other volume indicators like the relative volume progression, we can see that there was heavy buying here. And so this is definitely not a surprise that we rallied. And so often traders are, well, how do you know these rallies? Well, it's not really a surprise. It's just a matter of being able to use the proper tools and be able to have the skill to read them, and which is not very difficult if you spend a little bit of time with your tools to understand them. Pick the proper tools and then you spend some time to learn how to use them. So again, a good combination: relative volume split progression and the SDR and price profile. For my style of trading, that's a great combination. But again, these indicators could be used for any type of trading strategies that you or indicators that you're using. It's just a matter of combining it, and it's a great way to find imbalances. There's also another type of imbalance that forms, which is when the afternoon volume overtakes the morning volume, and this indicator will plot. Let me see if I can find. Will plot that imbalance. So here it is. We're seeing it plotted here, and then the next morning we gapped up and consolidated, and then we plotted it here. That imbalance plotted here, and the next morning you can see the SDR where it's at. Okay, right from the start of the day, the SDR was here. This imbalance was identified the prior day, and see what you can see what the markets did the next day for the next 2 days. It's great for short term, medium term swing trading or intraday trading tools.